Hello and welcome to today's Delta Credit Tip. So today we're talking secured credit cards. What are they? How do they work? What are some of the pitfalls? What are some of the benefits? And how do you get it? And how do you use it in your credit restoration process? Well, stay tuned. We'll tell you how on today's Delta Credit Tip. What's up, Delta Squad? Welcome back to today's Delta Credit Tip. So today we're going to talk about secured credit cards. What are they? How do they work? How does it help you in your credit restoration process? Now today we're going to really go through about 6 different things about credit cards, secured credit cards. We're going to talk about, well, what are they? Let's get a good definition of what they really are and how they work. We're going to talk about some of the misconceptions about these credit cards. We're going to talk about some of the benefits of having one, some of the pitfalls to having it, some of the characteristics of those cards that you want to look out for as you're shopping for the credit card, and lastly, where you might look to actually get one of these cards. Okay? Now, secured credit cards are a great tool that you can use to help build your credit, right? And as we go through some of this information, if you find it useful, please give us a thumbs up. Go ahead and subscribe, and while you're at it, hit that bell, because every Thursday we're going to come out with more information to help you in your credit restoration process, and you're going to want to get it right out of the gate, right? So go ahead and hit that bell, subscribe, and if you got questions, comments, concerns, or criticisms, go ahead and comment below and let's get back with you, all right? So let's go back to these credit cards and talk about them a little bit. So what really is a secured credit card? Secured credit cards really are just credit cards in which you've given the lender collateral so that they feel comfortable giving you a credit card. Because really, why would you be going secured? Well, it's because you don't have either established credit or you got bad credit, right? And as such, you are a risk to the bank. So if they take your cash and hold on to your cash and then issue you a credit card equal to your deposit, well, now they at least have your money in hand in case you default. So you give them $500, they hold on to your money, they don't give you access to it, but they'll trade it for a credit card equivalent somewhere around the amount of deposit that you gave them. All right? Some banks like Capital One will maybe give you more than the collateral you gave them, and some banks may give you less than the collateral that you gave them to protect themselves. Each card is going to be a little bit different based on their risk tolerance, okay? So the reason why this works so well is because, as you recall in one of our other videos, lenders are going to really look for 3 things to see if you fit their risk tolerance, right? The first thing they're going to look for is, do you have the capacity to pay? Do you have a job, right? If you don't have income, do not get a credit card, period, because it's not going to end well, okay? Secondly, they're going to look for your credit. Now, in this particular case, the credit score really isn't going to be the end-all be-all, because they're kind of anticipating that either you have a low credit score or no credit score, okay? The third thing they're going to look for are assets, right? Do you have cash? And in this particular situation where we're talking secured credit cards, that cash position, those assets, that's really what they're looking for, because that's really what's going to make or break the deal, right? You give them cash, again, they give you a credit card. But let's talk about some of the misconceptions. Just because you give them your money up front doesn't mean that you're going to automatically get approved for the card. We've seen plenty of people get declined because of their credit, especially if you have bad credit with the specific lender that you're trying to get that card with, cash or not, okay? And the thing is that these cards can still go very, very wrong. How does that happen when you give them the money? Well, let's say you have a $500 credit card and you max it out to $499 and don't pay them. Well, you're still accruing interest, right? And when you don't pay, they're still going to charge you that fee. So you can actually exceed the amount of the limit of the card and your deposit before it's all said and done. So next thing you know, you've got a $1,200 balance on a $500 card. So again, not exactly automatic, and it can go still very, very, very wrong. They can't normally or never, they will never take a portion of your collateral. They're going to wait till things have gone so bad that they take all the collateral. So you can still be late, even with your cash of yours on your cash in their hands, and it can still default, and you can still owe them money above and beyond the limit of the card. But there are a lot of benefits to this card. All that being said, it is still one of the easiest ways to establish positive credit because there is that cash position that usually will placate them enough to go ahead and issue you the card. So it's very easy to get typically, especially if you have a good relationship, a depository relationship with, say, your bank that you're trying to get that credit card with. Now, there is a competing product or a complementary product that you may be looking at, and that is a secured loan. Secured credit cards are significantly better than secured loans. Why? Because secured loans have a definitive beginning and a definitive end. And when that end comes to play, your score is no longer really being affected, and it could actually lower the score when the card ends, when the loan comes to an end. So you really want that open-end characteristic of the credit card so that you can hold out for as long as possible, building your credit with this credit card. Okay. Now, let's talk about some of the pitfalls to the credit card. So first off, these credit cards can typically be very expensive. They're going to typically have annual fees. The rate is going to be astronomical half the time. But remember, the effective rate that you pay could be zero if you pay the credit card off at the end of the month. So don't be too worried about the interest rate because we're not going to keep balances on them. We're going to talk about how you should use these credit cards before we're done here today. But typically that rate on those secured credit cards are going to be significantly higher than you would have on any other kind of loan other than hard money. Okay, so that's one of the biggest pitfalls, is that the cost of it is significantly higher. Now, the other thing is that secured credit cards on a credit report aren't as effective as unsecured credit cards, but they still work very well when it comes to establishing a debt-to-credit ratio and payment history and simply establishing a trade line, which most lenders, say for mortgages, want to see that you've got 2 years worth. So this is a great way to make sure that you can establish positive credit. Okay, so now let's talk about some of the characteristics. You're going out, you're going to start shopping for your card, right? And there are certain things on these credit cards that you want to look for in that card. Okay, because when you remember your credit matrix, the 5 components that make up your score, a good portion, 15% of your score, is based on the average age of the account. So we want a credit card that you're going to want to keep for a while. And so knowing what some of these characteristics will make you more inclined to keep that card longer. First is the cost. Let's try to find one without an annual fee if we can help it. You really aren't going to be able to do much about the rate, but you could definitely do something about the annual fee. So let's try to find a card that doesn't have the annual fee. The second thing that you want to look for in that credit card is that there is a grace period. Okay. Now, a grace period isn't how long you're allowed to pay it late. That's not what a grace period is. A grace period is when do they actually start charging you interest. Okay. Now, when you have a credit card, you have an annual percentage rate. That is the interest that you're paying over a year's time. But you can break that down to how much interest you're paying per day, and that's called a per diem. With most credit cards, you are not charged a per diem until you have exceeded that billing cycle without paying the balance down to zero. Okay? Now, some secured credit cards will not give you that billing cycle to pay down the credit card before they start charging you interest. That is the grace period. Some secured credit cards will start charging you on interest on day one, regardless of when you pay it off. So you want to make sure that that card has a per diem, otherwise you're going to be paying a bunch of interest. And like I said, you don't have to have debt to have credit. We don't like to be paying interest on credit cards. Okay. The last characteristic that you want to look for is that the card is convertible. So what's going to happen with some credit cards like Capital One, with their particular secured credit card, after so much time, they're going to give you your money back. Positive payment history, say 6 months, 8 months, maybe a year. They're going to send you your cash back, and now that secured credit card is now an unsecured credit card. That's a really good characteristic to have because it will definitely make you more inclined to keep it longer. That convertibility of that credit card. So where do you find credit cards like this? Best place to look, your bank, right? Most banks have one of these products. There's a Bank of America secured credit card. There's a Wells Fargo secured credit card. I think Fifth Third has a secured credit card. Most credit unions have a secured credit card. So definitely can go there. Like I mentioned before, Capital One has a really good credit card. There's also a website that you can go to called financialtoolshed.com. And on there, they have a whole list of credit cards that are designed to help you build credit. Just click on the Build My Credit tab, and there's all kinds of credit cards there that you can choose from at financialtoolshed.com. Okay, so let's say you go through all this and you finally get your credit card in the mail. How do you use it to actually build your credit? Okay, the one thing that you do not want to do is fill up the credit card and then slowly pay it down over time. That is not going to build your credit. That is going to destroy your credit. Why? Because of the debt to credit ratio. Once you get that secured credit card, what you should do is pick a single bill that is less than 30% of the limit of the card. So if you get a $300 credit card, that balance on that credit card should never exceed $90. Why? Because 30% of $300 is $90. If it's $500, you should never let the balance exceed $150, right? If it's $1,300, you see where I'm going with this, right? The reason why is because once you let that card go above that limit, you lose 30% of your score, okay? And you don't want to keep swiping the card, right? You don't want to use it for gas. You don't want to use it for groceries because that one time that you don't have the capacity to pay it in full, right? Because you've racked it up, now you got yourself a bill, and now we're going in the wrong direction. So pick a single bill like Hulu, Netflix, something real small, have it pay automatically with the credit card, and then have the credit card automatically pay in full at the end of the month. That way you don't have to carry the card around, right? I always tell people, set it up, put the credit card in a cup, fill the cup with water, stick it in the freezer. That way, whatever burning desire you have to buy whatever that is, it's got to melt that ice. So don't want to use it on a regular basis, just once a month. And hopefully, once you do all that, it'll start to build that credit score and it ends well for you. So again, hope this information helped. If so, give me that thumbs up. Don't forget, hit the bell, subscribe below. And in the meantime, make a choice, make a change. Delta.